All right. Friday's reversal and the Friday before is a great example of why it's difficult to short the stock market. I've said this many times. When the SEC banned short selling in financials back in 2008, it was the end of free markets as we know it. And at that point, governments intervene from time to time and sometimes quite aggressively in the markets. Um, the the Fed figured out in 2011 that if they could prop up the stock market, they could prevent recessions. And so, um, markets quite often these intermediate declines will get aborted a bit prematurely, and they won't run to completion. So, trying to short the market, um, with the expectation that an intermediate cycle will run, until its normal completion before it turns. Very often, you get caught when the market bottoms a bit prematurely and a bit unnaturally. Um, Last Friday, there's no way that the market reversed like this naturally, not ahead of the weekend, not with the extreme event or risk that was going on at the time, and that set the market up for this big um, counter trend move. And then the same thing happened here, and I even noted this in my last video. I said that there would be a huge push in the last half hour or so to reverse the market. That's exactly what happened. An hour before the close, we were near the lows, threatening to break down the new lows, and then we get this magical rally that appears out of nowhere, and we get about a 75-point rally in the last hour of trading. Um, Normally, an intermediate cycle low would come down the A wave. There would be a bounce, counter-trend bounce, a B wave, and then a C wave would come down and make an undercut of this low. I am leery that that is not going to be allowed to happen. That the plunge protection team manufactured uh, a bottom right here, and they're going to do everything they can to prevent an undercut and prevent the selling from intensifying. And that probably means that we're going to have to weather another complete intermediate cycle before this is done. If they would just let this run its course naturally, we're probably going to have a mild recession. Don't listen to the perma bears. This is not the end of the world. We're not, this is not a repeat of 2009. This is probably just a mild recession as people get nervous about the coronavirus, and maybe they don't go out to the restaurants or um, you know do all of the normal things they do. But it's not like a normal recession where the inflation has spiked and energy prices have spiked, um, constricting middle class spending. During that kind of a recession, um, energy prices and inflation surge, and so middle class America or the world, um, families that are on a budget, they all of a sudden don't have um, any extra money left over after cost of living to do anything else, to go out to eat or anything. That's not happening now. We don't have a constriction in middle class budgets. We've just got people a bit fearful to go out and spend, but they can still order stuff on Amazon, and for the most part, their lives haven't changed all that much. So this is not going to be a severe recession. It would just be a very mild recession. That's usually what happens during secular bull markets. Recessions tend to be pretty mild and over with quickly. And that's what the market is trying to price in, and governments are trying to prevent that from happening. And I think they probably stopped this intermediate cycle low a bit prematurely here. And that means that we're going to have to probably draw this out another a complete intermediate cycle. So another oh, 3 or 4 months. All right, so I think we're probably looking at something like this. Now, these aren't targets. I'm just drawing in so you get some kind of idea of what I expect. But I think we're going to have some kind of relief rally. Um, Sentiment is pretty extreme. The VIX hit 55 on Friday, and that's the only time it's been higher than that was during the crash in 2008. And so, I don't know that we're going to be able to squeeze any more panic out of this intermediate cycle low. So I was hoping we could come down and finish this and tag the 200-week moving average, which is down around 2,600 on the S&P. But I suspect they probably stopped it, this intermediate cycle for now, which means we're probably going to get a bounce, and then we're going to have a short intermediate cycle. So this previous intermediate cycle here lasted from May until um, into February here. So it had 5 daily cycles embedded in it. Usually a long cycle is followed by a short cycle. So I'm just looking for something with 2 intermediate cycles embedded within it, and maybe a final bottom and a multi-year, 4-year cycle low, maybe somewhere out here in June, perhaps. And then at that point, I think we're on our way back up, and we'll probably be back at all-time highs in time for the election. So um, I I think these last 2 interventions, which I called perfectly, I said, on Friday, both times, I said we're going to see an intervention into the close, and then we're going to be set up for a Monday morning intervention to try and turn the markets back up. Um, we'll see what happens tomorrow. If there's some kind of major news event, then it might fail. But I think they've got the market set up for that. And if they can pull it off, if we can get a strong rally on Monday, then I would say that they've probably stopped this intermediate cycle low a bit early. And now we're just going to have to go through another intermediate cycle, another short one, and we've pushed the 4-year cycle low out to sometime in early to mid-summer before this is over. And if that's true, then we should get a tradable rally in the stock market here, but I would be cautious about getting too bullish once we, if we come back up and we're getting close to testing these highs. I doubt that we're going to make a higher high here. I think we're going to come up short, and then we're going to come back down, and this time the decline will be more of a grind, more encompass a lot more weeks than this crash event. This will probably roll over in a left translated pattern, and then we'll have 5 to 7 weeks would be my guess of moving down into this final 4-year cycle low.